32, your options moderator. I apologize if I'm going to be like sniffing or coughing a whole lot anytime during this video. I'm a little bit sick, but so I don't really have any specific focus. I just wanted to kind of go through maybe what my thought process was and some of the trades I made last week. So I just went through the chat and pulled out a good bit of screenshots that I'd made from the previous week and was just going to go through them and kind of talk about maybe why I made them or the thought process behind them. So we'll start with the first one. This one, I'll just push the screenshot over here to the left. And this was early morning Friday. This was the trade I believe that I made in the 1K challenge chat. So we just go to today over here. I'll just try to recreate these for y'all as I go through them. That way we can just go through the same thought process. So you would have woke up Friday, would have seen the market, gap up, and it didn't really come into play. But right here, where that gap starts, you'd want to have a support line. If the market came back down there, you'd expect it to bounce. But so anyways, the trade was, I just saw the market. You can tell, let's see, about like right here, you can see these are 1 minute candles. So you can see we're just getting like huge 1 minute candles really quick, probably due for a pullback. And so if you go back, look at the 5-day, and you had to guess, if you're reading a chart looking for support and resistance lines, you're going to look from right to left. None of this down here matters because the stock or the SPY, is not down there. It's up here. So first thing you would see if you're looking from right to left, you would notice this. That's a real significant point, but we are of course already past that. And then the next thing that you would notice was this line right about there. And that's about where I initiated the trade. That's like, let's see, 251.20. And so that's where I saw that there was a good amount of resistance, and that's where I believe about where the puts were alerted, where I got puts. And so then we were just going to look for the next level. This right here would have been support because we've already got past it up here. And that support was the gap that led to the gap down, down here. And so as the market dropped, it hit that support level, didn't break through it. So therefore, that's why I got out of the trade. And you don't just have to look at the support level, but you can kind of tell if you're looking intraday, like how do you know that the support level is going to hold? Well, the reason I felt worried about it is because you can tell a lot of the time when you get these candles that are like this, you can see that you have a red candle that ends, well, hopefully you can see, you have a red candle that ends right there, and then a green candle that starts in the exact same place. That's generally going to be a sign that the market's about to make some sort of reversal, especially on a 1 minute chart, that it's going to happen over the next couple minutes. As you can tell, it was hitting that support level, and then it started bouncing off of it. So of course I closed the trade, got out of the puts, and if you wanted to, you could always get into calls. And really, the overall whole day, I believe there's some people who had calls from the previous day. If you had calls, you really could have bought them at the open. A good trade would have been to, like I said, you would have marked this level from the candles as soon as the gap up started, which is called a gap up, because this is the previous close. Right here, the next day, the market has gapped up, and then it just kind of ran the whole day. So you could have placed an order right here for like calls, and then really just held on to it the whole day, and you would have made a lot of money. You have to remember with options that, this right here, oops, let me just erase this line. This move that was, I think, just intraday, even probably like 2%. I don't know if you would have got 100% on your options, depending on the expiration date. If you had a close enough one, you probably would have got about 100%. And I know, I'm almost certain that some people that held calls overnight that had bought down here towards the end of the day, if you would have had those, I'm pretty sure that those did move a couple 100%, I believe, and that would have been about a 3% change. You can see in the stock, and so that sometimes can happen with options. 3% move can easily be a couple 100% in gain. But so that's really what happened with that trade and some of the plays you could have made that day. Uh, let's see, close this out, and I'm just putting the screenshots over here so that y'all know that this is what I saw during the day. Not that I'm just going back and doing this in hindsight. But I will go back through it like I am in hindsight and go through it on my chart. But so then you have this next one. This was from the week before, I believe, just showing the main two resistance and support levels. We traded inside a range pretty much after, this right here where we shot up. We traded inside that range all week. And so let's see if we can find that. I think that was, if you go back, look at the 5-minute chart, 5-day chart, and scroll this over a little bit. All right, yeah, so there we go. So you can just tell this screenshot, if you want to know how, like this red line, you should have known this red line was going to be support. Really, once this stock, like that 1-minute candle broke above it and it came down and tested it, you should have known that was probably going to be support. And the way you see that, you'd have known that ahead of time, is just that candle right there. That's always real significant when you have a gap up or a gap down where those start and end. So since it had broke above it, at this point it would have been support. And so that would have been exactly from, right there. I mean, it's within a cent of where that level was. And you can see later on in the week, you bounced off that exact same spot. And that's really how you tell, people ask, are these lines just random and stuff like that? Like, that's how you tell if someone knows what they're talking about is, or if they're good at it, is if they draw these lines and the market sometimes respects these lines. I mean, it's not going to be perfect, but you just want to be right, of course, a lot more than you're wrong. And then you can tell that the top line, I think that was about, let's see, I put it like 251. And so really what you have is you would recognize this first, and that's just going to be because that is the highest part of that candle. And you can see it respected that line, broke above it right here briefly, but you can see, bounced a little bit down from it here, bounced off of it here, bounced off of it here. This day where we had a gap down, kind of interesting. The very top of that line that you would have drawn, you gap down all the way to here. And then I always talk about playing gap fills. This day would have been really easy at the open. Buy when it bounced off the support. You're holding all day until it fills that gap. And that would have been, gosh, I mean, $5 on an index like the SPY. I'm sure that would have been over 100% gain on your call options. But anyway, so right here, this candle, you should have had the support line drawn. I respected that later on in the week. And then this resistance you could have identified right here. And of course, like I said, it broke, so it's not going to be perfect every time if you had been buying puts when it hit this resistance. But, I mean, really, how would we have came out of this? Well, if you'd have bought them here, you would have made money. If you'd have bought some here, you could have kind of tell. You see that same pattern that I was talking about on the other one when I got on my puts. You have this, if I can get it, red candle and green candle all kind of at the same spot. You can tell the market's about to reverse. That could really told you to get out. But let's say you lost right here. Well, if you kept shorting that line when it broke back below it, you'd have made money here, made money there where it bounced, made money there. Of course, you would have made huge money. I mean, if you bought puts at the close and it opens way down here, you just sell them at the open and you'd be up a whole lot of money. And then, like I said, on the opposite side, you could have bought calls when it bounced off of this. And so that's really just showing how we were trading inside that range and how you would have traded that range, throughout the week for some profit. And Then if we go on to the next screenshot, this is, let's see. Oh, wait, I believe that is the screenshot that I just showed you. Oh, no, it's not. This was the third. Oh, okay. So yeah, this is just showing you how intraday you would have played this day. This was kind of one of the more confusing days to play, but still there's usually stuff you can recognize. It's really just on this day, we started off. Let's see if I can get this a little bit. I can make this bigger for y'all. All right, there's that day. So, you started off with a gap down, didn't ever really come into play, but you would have, of course, put a big resistance line right there. I guess it did come into play once. But, you had a gap down, a lot of red candles, so you probably could have known that the market's going down. You can see the body of these candles, that same pattern where you go from a red one to a green one on the way down, so you can kind of tell that the market's probably going to reverse spot right there. So that's where you would have got that line. And well, I guess you already really have mainly the only two lines that you need. I didn't make many trades this day. I think I made one or two, and I even kind of said that in the room. It was a little bit disappointing. But so you have this line that you would have recognized at open. You can probably tell just by the way the market's going that you can short it. Another significant line, I don't know if people would recognize, is going to be if you can draw, you can tell that it lines up with these candles. But right here, you can just tell that's a big drop off point, and you'll notice that when it comes back up later, that candle ends at that same area. It broke above it for a little bit, tried to bounce off the candle where we opened, and it didn't. And then once it got back below it, you can tell it's not exactly to the cent, but it's very close where it just couldn't break back above that level. And eventually it stopped trying and it just kind of slowly drops the whole day. But mainly you can really tell that this line down here is strong. You can see later on in the day it respected it. I mean, those two candles are spot on. And then it closed and closed. Looks like just a little bit below it. Then that next day you had a gap up. So really you don't have a lot of plays. I mean, you just short right here. You can go long right here to right there. Wait to see if it breaks out. Of course it didn't. And so if you want to re-short, you can. Short or buy puts, whatever you want to call it. And you didn't really have any reason to get out of those puts until close. And so, would have been pretty good money. Then we can go on to screenshot number 4. That is, okay, this is the day for that gap. Yeah, okay, so this was taken during the middle of the day, and this is kind of just showing you, like, you can tell I already had that line that I showed you earlier drawn, and that's where the gap down came from. And then, you would have seen this line right here from right at open. This line probably should have been a little bit lower, but that's where you can tell these 3 candles are resting. And so it went up and we were dropping back down a little bit intraday. I think that, like if you'd stop the chart right there, that's where I was. But so I'll just kind of chart how you probably should have played the rest of the day and really what happened. I mean, the easiest trade here really would have been like what I've said before. The gap fills, so you're just going to have right there, approximately right there, your line from where that gap was. And of course, notice that, these lines play out later. This is where that last gap came from. Almost the exact same price point comes into play, a good bit. That's where you had that gap down. And then later on in the week, you can even see this place being respected a little bit. But anyway, that day you would have had the open, would open right there, and on a gap down, statistically, you'll be able to play the gap up for a fill, and it would have been vice versa. Like with a gap up, you can play a gap down for a fill. But Anyway, so you'd have had their support line drawn from it open, went up a little bit. You have a little bit of a pullback, kind of the same deal you had a little bit Friday that I played. But anyway, so you're going to go up, have a little bit of a pullback. You can see that same pattern, the red candle, green candle, and then it reverses, goes up to right here and hits the top of that gap, and so that's where you probably would have exited your calls, if you're playing it safe. And if you wanted to, you could have shorted it here because a lot of the time they reverse. But really, the easiest play of the day would have been to, since you have a gap down, just buy calls at open. This thing obviously isn't going against you, so you're pretty safe most of the day. And you would really just hold throughout the day until it filled that gap. And that's just, you may just say, well, that's one trade. Yeah, that's one trade that's, $5 on an index. That's probably over 100% trade if you can get some close expiration on your calls. And the reason I say close expiration is because the way that this stuff is priced is, if it's closer expiration, it's kind of priced on probabilities. So if you buy it when it's down here at 245 and you buy a call that has a 250 strike price that expires on the same day, the probability that it would reach that price on the same day is lower than if you had an expiration that was further out. So the close expiration, because the probabilities change so much throughout the day, up here, you have a pretty high chance that the SPY is going to get to 250, much more than down here. So the probability increased drastically. So therefore, the price of the option will increase drastically. And if it was a further out expiration date, if you had bought it down here and it was a month expiration, well, $5 on the index in a month, that's not unreasonable at all. That option would have probably barely moved. And so that's why if you're doing a lot of these day trades, you would want to play the close option expiration date. All right. And so I think I have two more screenshots maybe. Yeah, this one was from Amazon, and this was just earlier in the week. I was talking about the flat top. Flat tops are usually good to play for breakouts, but you can, of course, short them too. I talked about this one in the chat some. I don't love to alert Amazon, at least not right now. I just know it's a really expensive option, but you can definitely play it. Amazon options are very expensive, though. Okay, it looks like I already have a couple of these drawn. Let's see. So that was that photo, 1520, yeah. So this was from earlier in the week right here is when you would have noticed this. You can see that when it goes up to it right here, what turns out to be the high of the day, you can see kind of the inverse of that pattern that I talk about. Instead of a red candle, green candle, now it's a green candle, red candle, where the body ends at about the same place. And that's like right at 520. Try to get as close as I could. You can see it bounces off of it, comes back to it, hugs it, and that's what I mean by it just has like a flat top on it. There's just a flat line that it just keeps on hugging and hugging, and it just can't get past it. And so really once you saw that, that would have been kind of like a double top, because it bounces off the top twice. You could have started shorting it if you want to. With flat tops, usually they have a good amount of momentum, so I think it's easier to play them long. But anyway, you can see, I'll erase this line. So if you were playing this the next day, if you were playing Amazon, when you got up, you would have noticed that since you have a gap down, statistically it's in your advantage to play calls because you would think it's going to fill upward if it starts moving in that direction at all. So you could place a support line right here. And I think I kind of just brushed past this, but like these support lines, you'd have placed it right there after that first candle closed. And what you use these support lines for is that's just, if it breaks below this, that's where you get out of the trade. So this support line is your risk. If the stock starts to move below that support line, you would exit your calls. And so that's how you limit your risk. You're day trading, so you can get in and out. I don't think anyone has enough money with Amazon options that are close to being, around this level, they would have to worry about liquidity. Amazon's pretty liquid. Same with the SPY and stuff. As long as you get strike prices somewhat close to where the index or stock is actually at. But anyway, you would have woke up, you could have bought calls, started to fill up to where the gap was, and that gap would have, let me redraw this just not to confuse you. So if you're looking from the previous day, you would have probably seen the gap fill, which would have been the easiest trade. That would have ended like right there. And if you can't see it on the recording, there's a little red candle right there. And so that's why I have the gap fill in that spot. So that would have been your resistance line for you to get out if you were long. And you can see it kind of stayed around this level, and then it kept on going. And so once it broke above it, you could have gotten calls if you wanted to when it breaks above the gap filled. And of course, once you're above it, that would then act as your support line. So if it breaks back below it, you would want to get out. You can tell, it's kind of hard to see, but you have this intraday candle with a little bit of a gap itself. That's really bullish for a huge green candle like that to be there. And Amazon just kind of ran the whole day. I mean, you can see a little level right here that would have worried you a little bit. And so when you saw this, maybe it's about like right there, you could have got out, but that's not a whole lot of anything really to worry about. I mean, if you had been in calls throughout the whole day, you're going to be doing pretty well. You saw no sign of real weakness right here. That's just kind of, let me actually go back through that. So this right here, I mean, why you probably wouldn't have really wanted to get out is you can see that same little pattern where you have a red candle and then a green candle, and the bodies are in the same area where they close. And that was just barely a pullback from where you would have had the gap fill. And so that's a pretty bullish sign that there's not really a whole lot of sellers, that as soon as that stock dropped a little bit, buyers came back in and took control. So anyway, you can hold, probably hold through that without any real worry. And then where you'd want to start getting worried is up here around, so let me just place another line. Up around here, where you'd have had this like double top, that's a real sign that you may want to get out, because it goes up to a level, kind of bounces off of it, hits that same level, and once as soon as you have that double top up there, that'd probably be a good sign to get out of the trade. If you're long, if you want to look at shorting it, you can. And so anyway, that's how you would have played Amazon that day, and that's kind of what that screenshot colored it in chat. You know, if you wanted to know what my play on Amazon was, that's kind of what it was about, and how I saw all those trades and how I would have played that as it unfolded throughout the day. So this is, okay, this is just showing what we had on the SPY from the weeks before, and this is kind of a little more, this is a lot bigger picture. Show you from the weeks before what happened. So you can go, you're going to have to go out, I think it's a 3-month maybe to see this. Okay, I already had them drawn. Well, I mean, I drew them just before I started this video. But so this is the 3-month. We're looking at the daily chart. This is really when a lot of this bad stuff started happening. But so really with this, how you would have played it, as you can tell that after we had these red days, you know, we go down, we go back up to here, and this first, where this green candle stops, you know that those are extremely significant. And we just kind of form a range and we bounce in between it. And so how do you know where to put those candles? I mean, if you didn't have them, you're just going to see that we're having big red day, and then the market tries to go up a little bit. This is as high as it can get. So that's important to you, that after these sell-offs, this is as high as we've gotten. And so you wouldn't really know, like, I mean, you would kind of think maybe this is a good time to enter puts, but it wouldn't have been as safe right then. And then you can tell throughout this that, and you want to look at the body of these candles, not these wicks. The bodies are more important. You can kind of tell we get that red candle, green candle, body at the same level here. You can kind of tell that's probably going to be a place where we're about to reverse. And so that's where you would have put your support level. And that's a good sign that you could have jumped in and gone long. And then, it's just pretty easy to play. Really, I'll go through it with you, but it's pretty easy to play all the way really to right here. It's pretty easy money, I would say. But so you can go long, hits your line that you would have been able to draw earlier in the week, and so that's when you would have exited your long. And really, once you see it start to bounce off that, I mean, bounce off that literally to the cent almost, you can tell that, hey, I drew the right support and resistance level, so I'm just going to play them until they break down. And so you got to go going short again right there, hits your line almost exactly, and you just go long again, short again, and then you would have tried to have gone long again, and you wouldn't have really made any money off of this, and you might have even would have lost a little bit on this day if you would have held overnight. I don't like to hold trades overnight, but so you would have won a lot more than you lost if you had done that. So if you manage your risk correctly, you'll come out profitable. And really, the reason this right here I say is so easy to play is because these were just days where you could buy puts. The market was just going down at a slight incline almost the whole day, and it was I mean, there was a problem when it broke below this support level, and that's where it opened. That's where you'd have known that, like, hey, this is going to be a bloodbath. Everyone's already really worried about the market, and we just broke. That's a line everyone has looked at this and sees this line. It broke. It's significant. And so these days, most days you could have bought puts and just held them the whole day. The market was just slightly sloping down the whole day. But I mean, when the real panic happened is, you can't see it here, but if you were watching the charts, you just wait until a low of day was established, and then once that low of day was broken, the next day or later on in that day, you would just see panic selling for, like, it'd be a couple dollars on the index, at least like $1 or $2 in a minute that the index would sell off, and that's a lot for an index. And so if you had puts, they would just shoot up, like 100% or more, super fast. And then you would usually see a pattern. It'd be small. It'd be on the 1 or 5 minute chart, but you'd see a pattern like that, and you'd know to get out, and you'd usually have time because the selling was a lot stronger than the buying, so you had plenty of time to get out of that trade. And there was just panic selling every day when the low of day broke, just all the way down to here, and then that's kind of where we put in the bottom. And then you have this week, and I don't think we really have a range established here yet. I started to think that we were about to have one right here, but obviously we didn't. We broke above that, and so right now I'm just kind of waiting on the SPY overall to form a big trend and see where it's going. But yeah, anyway, that's just kind of a little bit of my thought process, how I make some of these trades, and how I do a lot of my charting. So I hope that helps some of y'all.